bad news is good news. When the economy is not doing well, we think that we're going to get an accommodative Fed, which makes equities very happy. Gold has a long runway to catch up still. And then you look at the short positions that have to get cleared on gold. That's going to create additional buying pressure.
The S&P is looking at possibly 8 or even a 9,000. That's very bullish. I'm not all in on this just yet.
Harder it's going to be for this clarity to get passed because people are going to be like, now you're taking something away from me. You should have acted faster.
You've probably heard me mention Uphold before, and there's a reason I keep talking about them. Uphold makes it incredibly easy to bridge the gap between your portfolio and the real world. This has not been done before. Their Uphold Debit Card is the best example of that. It lets you spend your crypto or your cash anywhere Visa is accepted, all while earning 4% back in XRP on every purchase. It's the easiest way to stack rewards on your daily spending. Download the Uphold app for more and get started. Welcome back into the digital street. I am joined here by Miss Rebecca Walzer. How are you, Rebecca?
I'm great, Paul. Thanks for having me. Love to be here with you. How are you?
I'm good. I'm good. So I'm ready for summer to be over, and I am ready to find out if this market is going to correct, is going to pause, or are we going to see some sort of retracement? A lot of things have been happening this week. We'll get into the Fed, whether or not they're going to raise rates, or are they going to hold? We'll also talk a little bit about CPI and its impact. And then at the end, we'll talk a little bit about gold and alternative assets, and also just some sectors to watch. So stick around for all that good stuff. Rebecca, let's just lead it off right here with some of the things that have been happening with, obviously, the CPI. I want to kind of share with our audience a little bit of where this is right now. So as you can see, year over year, 3.4. The expected amount was 3.4. The core CPI year over year was 2.5, expected 2.5. So it's kind of flat. We are at where we thought we were going to be. But if you consider this along with some other indicators right now, why are we seeing the Fed percentage of a rate hike dropping like a rock?
Yeah, so just last week, the September rate hike probabilities, Paul, for staying status quo was only at 55% and just under 56%. And we had over a 44% probability that we could get an actual 25-bit hike. If you look this morning after CPI came out yesterday, and then of course we got PPI this morning, we now only have a 34% probability that we could get an actual 25% or 25-bit rate hike. So basically, the CPI and the PPI did take about another 10 percentage possibility off the table for us to get actually this hike in September. That doesn't mean that data couldn't change, Iran couldn't flare up, but certainly September absolutely seems off the table, which is right in line with what I told my client base last week. There's no chance that we're going to get a September hike unless CPI or PPI just comes in astronomically, unexpectedly higher. And with CPI coming in exactly as expected, PPI went from 5.5, it was expected to come in at 4.9. It actually came in at 4.7. So what that means is you've got the wholesale inflation coming down with the expectation of consumer inflation as it was expected. And that just takes off more, relieves pressure. Pressure gets relieved from the current consternation that the Fed needs to make a decision and needs to make a decision this month in September.
Do you think Warsh's position in kind of holding back, letting the market do what the market needed to do has been, met with open arms with the other Fed governors, or are we going to continue to see some dissenting here coming up in September?
I mean, I think that there's a reason that Powell stayed on the board of governors. I don't think that he's there to be Warsh's ally. And I'm not suggesting that it is political, though I do believe some of it's political. So I do believe we will continue to see dissents. I do think that Warsh looks like a genius because he really got hammered by the financial media at his second FOMC meeting. I mean, you had people talking about what he's saying doesn't even make sense. He answers. I mean, there's like a lot of memes out there, Paul. Like, how do you handle a FOMC press conference? You answer questions with answers. You disregard the premise and you give your own premise. So they have like all of these things of Warsh's 5 top techniques of how he handled the FOMC meeting. So he really did take quite a beating meeting, after that meeting, because of his lack of wanting to give guidance, he's even potentially wanting to pull 8 meetings down to a lesser amount of meetings. So I feel the financial media is not used to his style. They're used to someone who was a lot more explanatory and
Right.
apparel, and they don't get that in Warsh, and so they are upset. But you know what? Look what happened the very next week, where he decided to do nothing and hold. We get jobs reports from July, which were just abysmal. And of course, that really made the market react positively.
Hmm.
And what this goes back to, Paul, is bad news is good news. When the economy is not doing well, we think that we're going to get an accommodative Fed, which makes equities very happy and small caps very happy, because the
Yeah.
cheaper they keep capital and the more they accommodate, the better it is for them to obviously spend a lot on R&D capex.
I'm showing this tweet here on X, and what they're talking about is the core CPI inflation at 2.5 in July. And the point that they're making is this is back to where it was prior to the start of the Iranian conflict. So that's my question is, are we in a position right now? And I'm hearing more and more faith that the S&P is looking at possibly 8 or even a 9,000 by the end of 2027. That's very bullish,
It's,
Rebecca.
it's
I'm not all in on this just yet.
Yeah, so I don't believe that will happen either. But it was funny because I think you and I talked at least a month and a half ago, and you were saying, Rebecca, you say that S&P could be 8,000, and you're like, but we're running out of time, because it was at a period where it had pulled back quite a bit,
Yeah.
from some kind of Iranian news or something. And so yes, I mean so Trump is out, saying that the United States almost has full control of the strait, and if something like that happens, and it continuously happens, if we don't get disruption again, back to some kind of conflict escalation again, then again, I think the market will rule with that happening. But if we can get some kind of stability with the Iranian situation, then this market really does it. You know, it has real numbers behind it, Paul. It's not all just capex. There's back orders galore on the compute side, on the memory side, on the processing side, on the energy side, on the logistical build out side. So industrials are going to be benefited. I mean, this is a tide that truly raises all boats in
Yeah.
all sectors. And that's at the very beginning stages. Wait till these other sectors really understand how they can implement and leverage AI. And so eventually it's going to touch every single part of our economy. As we know, this is a massive transition. And so we do have long-term runway. That's not to say that we have the best fiscal and monetary situation to support that long-term technological revolutionary runway, because we are at the end of an aging fiat fractional reserve
Right.
system that's giving away to digitization and blockchain. So that is going to cause problems as you monetize and implement AI. As you're changing your currency globally, you're going to see problems with that. It will cause issues. It will. Absolutely.
So we're looking at inflationary components here that are essentially driving the dollar down in terms of what you can buy for it. Gasoline is up 24%, and this is by price changes over last year, which was the July CPI report back then. You had electricity up 4, apparel up 4, overall CPI was like the 3.4 number. Food away from home, which is rising food prices, at 3.4 up. Transportation almost 3%. So there is a continued lift, even though this is coming off of the previous administration where we saw a little bit of a hyperinflationary situation. My question is this: when you look at the way people are playing the market right now, which appears to still be very safe, they're going into very low yield products. They're not really offsetting what is happening in terms of inflation, and especially with a deflationary dollar. So, what would you say that the safe haven is right now? Would you still look to gold, or would you look at maybe some of the securities?
So, gold has a very interesting story, because if you look at, you can calculate the way that gold, and you can do the same thing with the blockchain, right? How many actual like Bitcoins are outstanding, how many are ever going to actually be created. And you can kind of see that you could have a price differential based on supply, right? This is a situation with gold. We know that when gold was an official tether to the US dollar, and we came off that domestic tether back in 1933 when FDR signed an executive order, came off of the international ability to convert dollars for gold in 71 when Richard Nixon finally killed the international gold
Yep.
tradability. And so we haven't tethered to gold to real true dollar, since then. And when you look at what happened in the last just 6 weeks, Paul, between the yen and the dollar, you had the yen approaching its weakest in 40 years, and the dollar its strongest in 40 years. And that was going to implicate the reverse carry trade, which would be really kind of catastrophic for us amongst all of the other factors that we have going on
Exactly.
in the world.
Yeah.
We can't have reverse carry trade right now. And so obviously we had, this extreme intervention that really hasn't really been, it's really unusual for this to happen at the level that it happened. And then of course to sell euros instead of treasuries and dollars was a whole nother thing. But how do you strengthen the yen without weakening the dollar?
Exactly.
And when you look though, Paul, at the yen gold situation, what you understand, and right now we have a lot of shorts. The short position on gold right now is high. The machine shorting is high. So when you look at the yen gold yield, you realize gold has a long runway to catch up still. And then you look at the short positions that have to get cleared on gold. That's going to create additional buying pressure. So I do think for the short term here, from now until the end, we will see into this year, we will see gold come back up again. The only reason I give that as a caveat and I put an asterisk by that is because we still don't have Iran resolved. And we know
Right.
that anytime we have global war tension around crude, that central banks always go to gold for liquidation. So that will still pop up, although we have seen a massive return since I would say April of this year of central bank buying back into gold. So that also tells me that they're sensing a sea change as well that's coming, that they are now again preparing for. So you've got
Interesting.
massive central bank buying, you've got the yen gold yield completely out of whack, and then you've got the US trying to fix the yen dollar problem without weakening the dollar. All of these things are problematic.
Yeah. All right. So, with that being the case, you've got Reuters saying right here that Treasury yields could be declining over the next year. This is showing the 10-year, 3-month, 6-month, 12, and the 2-year yield on a 3-6-12. So, first of all, do you believe that this is going to happen? And if so, how do you think the market is going to react in terms of rotation of capital?
So whether the treasury yields are going to be coming down, as this chart says, it's hard for me to see because I believe that we are not going to get a straight resolution on the strait, which will continue to create inflationary pressure on crude, which will continue to impact global supply chains and trickle down. And this is basically letting us see, hey, we're actually going to be getting some kind of reprieve.
Yeah.
It's interesting that Warsh said let the market do the work, and the
Hmm.
market did the work, and we saw the long end of the yield curve go up. So I don't see anything as right now, as yet, that is going to be bringing inflation down necessarily. Maybe you could look at a weak jobs market and say jobs are going down, and that's where the Fed could get accommodative again. But getting accommodative, it's almost as if they would have to be implementing rate cut policies in order to get the yields that
Right.
that person was
Exactly.
prognosticating.
Yeah. Well, we're showing the chart here on the central banks to your point of continuing to accumulate their gold position.
Yep.
And the pace is pretty significant. Now, it did fall off some, but it was still higher than it was 6 months ago, and now starting to climb again. So there are cycles and ebbs and flows of this. What do you think is going to be the catalyst for, and we'll stay with gold for a second, and then we'll talk about digital assets, but what do you think is going to be the catalyst for gold to be a position where it becomes a flight to safety if we do see treasury yields dropping, and we do see the situation right now in Japan? If they take the carry trade on blockchain and are able to successfully start liquidating securities, how much of an impact does this have on the US?
Oh my gosh, it's so much happening at once. One before we move on for this chart, though, Paul, I just want to point out, so people can see. Okay, they are like, well, yeah, but still, we have 2 quarters left. Look like it'll be about the same
Yeah.
as last year. Look at the difference between
Yeah. The big one.
Q1 and
Yeah.
Q2.
And
That's
Q2.
the
Yeah.
point.
Huge
Is that
jump.
that's the point? Is that in Q2 we started seeing massive central bank buying again in mass, and that was a big tell. So obviously gold, people go to gold and in very specific time periods. Number one, they will go when they perceive it as a safety play. So if we do get, markets that are starting to really pull back on this AI trade as overvalued and overbought, and we're going to trim down equity prices, you will see people move back into gold for safety because they get anytime we see the fear and greed index go back to major fear, people
Hmm.
buy gold. You're going to see a lot of bank buying from the central banks, like we just talked about. You're going to see that a lot of shorts is a huge short position that has to get rectified because it looks like it's trending to the upside. And then again, even though gold is used by central banks for liquidation in the middle of like geopolitical crude issues, people also buy it when they perceive that global war could be coming and they feel like they need more hard assets. It's more of a safety feature of, I don't think I want to be in equities or fixed income bonds at all. I need to be in something that's really a hard asset. I want to tether to hard
Yeah.
assets. And so you'll see that as well. So there's a lot of things that could cause rotation back into gold, but it has been oversold and liquidated this year for a lot of the reasons that have happened earlier. And I think that those reasons are tailing off now.
Interesting. Okay. So a couple of questions here for you on the gold side of things. This was the article there we just talked about. Malgrim was talking about this, saying that, gold has always kind of attracted a certain type of investor. We're starting to see that capital and those fortunes essentially starting to rotate now into a younger audience, some of which have been talking about digital gold, meaning tokenized gold. We're seeing that climb up the charts right now when it comes to real world assets. Do you think that there will be a time in the next 5 years where we do see much more tokenized gold and really kind of the younger crowd going in that direction versus actually physical gold delivery?
I mean, I think, Paul, it's how is it getting tokenized? Like, how are we explaining to these young investors the tokenization process? In other words, is it really a one for one backed up with the real thing? Because and maybe the younger investors would be a little bit more open to it, but certainly our older investors and our middle age investors, when they think of buying gold as a hard asset, they don't want the frills of, oh, I can tokenize it and make it fungible,
Yeah,
liquid on the chain. So I think it's how are we explaining the tokenization to people so that they can understand that
right.
I still have this hard asset, because that's what a lot of these buyers, that's what they're afraid of. They're afraid of all of these newfangled,
Yeah.
computerized algorithms that are telling them what their values of their assets are, as opposed to just holding the asset.
Do you find people hold more gold ETF, or do you think physical is still their weapon of choice when it comes to security?
There is no doubt from my practice's perspective, and from what I understand generally in wealth management in general in the country, that most gold buyers have made the switch to accept buying and holding an ETF. Of course, we would want an ETF that would only solely have gold in it, no other asset mix,
Yeah.
and that's a tax reason for that. When you have an exchange traded fund that only has precious metals in it, then it would be a tax according to the precious metal calculation versus regular long-term capital gains. And so we have found that most investors are comfortable with ETFs. However, there's still those people, Paul, that want to put gold into their drywall and want to have it in a safe and want to physically have
Sure.
it in a vault that gets audited every year. And so, and from that perspective, those people are really diehard. I need to have the physical metal, which I do not poo-poo on at all. I think that there could be a day where we're in our bunkers and that person was really smart.
More
I hope not,
physical.
but
Physical gold could be the key there. I know I'm still on the fence on physical. I'm okay with the ETF. I do buy a little bit of digital gold when it comes to, XAUT right now, which is, Tether Gold. You
Mhm.
could get into Paxos Gold. So far, it moves very, very unison in terms of the chart. It doesn't, and it's supposedly backed 1-to-1 with both these organizations. So I think if we see a major come out with it, someone like a Robinhood or possibly even a major that goes into true tokenized gold, that could start to shift things pretty quickly in how younger audiences
Yeah,
get exposure to gold.
I
Let's
totally.
talk about, okay, so let's shift over to digital assets for just a second here, because one of the things that I noticed over the last several months has been this ramp up of traditional finance starting to do things that are very crypto oriented. One example would be this deal right here. Let me share this with you guys. So this is Bitmine, a little bit on what Bitmine's strategy has been. Its latest holdings right now, 11.6 bill in crypto, mostly in moonshots. And that includes right at 5,800 ETH tokens. You look at almost 209 Bitcoin, and then 180 million stake in Beast Industries, which is Mr. Beast, another
Mr. Beast.
huge content creator.
Hmm.
69 million stake in 8Co Holdings, another moonshot. So what they're doing is they're putting this asset to work, and essentially the dividends, so to speak, which is the staking rewards coming in off of that ETH every day, and they're putting this to work. Is this kind of a strategy that investors understand and would follow with what Tom Lee is doing here?
I mean, I do not think that the lay investor understands staking at all, Paul. I don't. I mean, Bitcoin obviously is commercial, institutional, right? So
Sure.
they can put their 5.8 ethers, because when you stake, the token is, or the coin is frozen. It's being
Yep.
held, right? It's not it's not, it's being
It's like
held until.
think of it like a CD. You're
Mhm.
dropping, you lock it, even though it is redeemable at any time, but it is earning rewards immediately, but it is locked up. However,
But
if you get into DeFi, you can utilize it in some cases in other ways. So there are other functions within that make it work really in a cool way for those who are really into digital assets and DeFi. So yeah,
I
I don't
I'm
know.
curious to get your opinion about Fidelity and allowing staking with ETH on their platform versus like with how
Yeah.
does that correspond to Clarity and the restriction against any kind of yield on passive? Is it not considered passive because you're actually doing an activity via the staking, so that's
Well,
no longer passive?
yeah, if Clarity goes through, they're probably going to put some sort of implementation on these. We're showing the tweet right here that Fidelity filed to add staking to their quarterly cash distribution. So they're doing it on a quarterly basis. 898 million in an ETH, by the way, on their ETF. So this would be staking and potentially up to 100% of their ETH holdings. If you look at most of those returns, even though ETH is a little bit lighter than what you might get in a money market fund, it's a little different because it's a viable asset that has volatility. So you've got upside and downside.
Mhm.
But I think the point behind this will be one way. If Clarity gets passed, they will have to put some implementation rules in place to deal with it. But if Clarity doesn't get passed, and we now know that the SEC is going to be putting out these rules, I think the SEC is going to lean heavy into TradFi like Fidelity to allow them to do these things and maybe even get more creative,
Which would be
for
better.
innovation.
Which would be better for innovation. Would you think? I mean,
Yeah,
it's like,
100%.
so
100%.
it's
Well,
actually.
in the sense that we don't have clarity. If you had clarity, there would be other ways that you could innovate, but that's the challenge right now. I'm curious because it has been a long time since Fidelity started offering Bitcoin and ETH. I have a Fidelity account. I use it to buy some Bitcoin and ETH. And one thing you cannot do that you can do almost everywhere else, Rebecca, is you cannot move that digital asset out of Fidelity. You are locked in.
What do you
So
mean?
it
You
is
can't transfer
one
it to
issue.
your own digital wallet?
You don't really have access to it. You can buy and sell only. And even
Is it
within
because you
ETH,
don't have custody of it inside of a wallet? It's custody by Fidelity, so you don't physically have the
exactly.
physical
Yeah,
custody of
you
it.
don't have it to where you can go move it put it to work, take loans against it, things of that nature. Doesn't work. It is a true, it's kind of a clunky asset in my opinion, but I think that there are a large amount of new investors in crypto that will probably go this route simply because it's easy, even though it does keep your crypto wallet or your crypto account completely separate from your money market accounts and your investing accounts. You literally have to move funds from one to another. So it's not like a Robinhood where you can be all fluid in one
Mm.
account. So
Wow, that's really that's a shame.
it's a
And
downer.
mm,
I thought that they would, but the point I'm getting at is they are bringing out the potential here for staking, which they had not had before.
yeah.
And are they going to draw in maybe more crypto, curious investors because of just that alone, saying, "Hey, your assets earning money."
And I've got to say, the longer we don't get clarity passed and these kinds of things draw in investors,
Yep.
average Joe investors to buy and then say, hey, I can make yield this way because people will
Hmm.
figure that out. The
Right.
harder it's going to be for this clarity to get passed because people are going to be like, now you're taking something away from me. You should have acted faster because I didn't have it. But now I'm getting a yield, I'm getting a return. I don't think that it's right for you to take that away from me. And the banks
What
are
do
going
you
to have
think
a
is going to
problem.
happen with the SEC? They're claiming they're going to drop some big updates tomorrow in regards to some of the regulation framework that they're going to try to put together because obviously Congress has stalled on clarity. We don't know what's going to happen, but they seem to be proceeding forward. I didn't think they would.
I
What
didn't
do you
think they
think?
would either, especially because it's Trump's man, and we got rid of we got rid of the SEC chairman who was really anti crypto and really putting some. And under Biden, we had some major blockades there. So I am surprised, but honestly, it might be just exactly what I just said. It might be in the absence of you acting, we're going to act, and we're going to act in a way that we think is beneficial
Right.
to move this along and make us again this. I mean, maybe some people out there are listening to us, Paul, while we're saying like this cannot happen, that we put this moat around legacy technology and force the innovation of the new technology to route outside of the United States. Maybe people are listening to us, and let's hope that this SEC is going to give us guidance that actually propels and enables transactions and enables stablecoin issuers to understand the regulatory framework and all of the things that could possibly be coming from the SEC.
Yeah, I think you got two things playing into this right now. One, if the SEC goes ahead with, some sort of framework, because it'll take time to implement, most of these things. And in most cases, they're rolled out over a period of time
For
anyway.
sure, for sure.
So it's not like it's going to happen tomorrow, but maybe it's a 6 month or even a year in some cases. With all of that happening, and Rebecca, you look at what's happening with the midterms. You've got an issue right now. I'm going to try to bring up Polymark
Yeah.
on the midterms.
Hmm.
Um, you got an issue right now where it looks as though we're going to lose. When I say we, crypto industry, if you are a crypto industry person, you might be pro Republican because they've been the ones that have kind of pushed this across the line for the most part, not necessarily all, because there are
Right.
some Democrats that are doing this too. But if you look at the odds right here, there it is. You got 3 seats potentially that are up for grabs at the Senate, which would be a 53% chance that the Democrats take the Senate. If that occurs, and you already have an 88% chance that the Democrats take the House, likely, this would be a complete split administration. My question is, what happens to all these regulatory frameworks out of the SEC, the CFTC? You've seen this before. What happens when you have something like this?
Yeah. So it's really going to be a real. So there's it's everything I could possibly say is going to be negative, and I apologize for that. So the first thing politically is we could again see because if you have both houses and you know how the Democrats feel about this Trump administration, we could start
Yeah,
to see impeachment again, which would be
sure.
very distracting and make this administration have to defend that. And if anything, even if they didn't believe it for a third time it could work, it would just be to distract him from his agenda that he has been so forcefully implementing these last 2 years. On the actual confrontation of regulation, you could then get a Clarity Act that the Democrats want. Obviously, they could get what they want, but
Mhm.
they would have to have the president sign off on it, and he wouldn't. And if he didn't, you'd have to have a supermajority, and I don't think there's any chance we'd have a supermajority where they could actually overrule a presidential veto. So
So you
probably,
don't think Trump would sign a clarity bill coming out of a democratically controlled House and Senate?
I don't think he would sign a clarity bill coming out of a Democratic controlled House and Senate that he does not agree with at all. Like if
Okay.
he thinks that that it's just going to do more harm than good, he's not. I mean, this is something that is supposed to help us lead the way. So I'm not suggesting that the Democrats would do that, but let's be honest, they want to protect the banks. They want to
Yeah.
do a lot of things that the Republicans are the ones that are fighting them. And if they own both houses, then we're going to get a much more democratic drafted version of clarity. And if it's that wrong, will Trump sign it or not? And then if he doesn't, we don't have it because we're not going to get a supermajority to overrule a veto. So that
Yeah.
puts clarity really back into, we don't know at all what it will look like or if it will get done at all. And then of
Well,
course, their other problem is the SEC regulation, obviously all of these chairs of these executive agencies
mhm.
answer to Trump. So you're
Yeah.
still going to have the actual enforcement these next 2 years going Trump's way, but or at least it's there. I'm not suggesting that he controls everything they do, but they were appointed
Some
by him.
influence.
Exactly.
Yeah.
So you'll see the regulatory bodies still try to back up Trump, but the next 2 years would be a quagmire, and it would be it is not the time. It is not the time. It is not the time to have. I was really happy that we had a businessman win the presidency for such a time as this, someone who understands finance, capital, allocations, investment, research, development, long-term regulations, regulatory, bureaucratic red tape, and how that is a problem. He was the right person for the job during this fourth industrial revolution. Whether or not he can deal with a steeped in Congress that cares only about what they can get for themselves, it's going to be to be seen.
Yeah. Well, I'm concerned that we're going to see all sorts of investigations coming at the Trump and the Trump family and
Yep.
all the organizations that were aligned with Trump through this. So you could even see, you know, high level trials, or I should say, hearings like what we saw with Fauci
Right.
that could come up with everything from Coinbase,
Absolutely.
Ripple. I
You're
mean, they
right.
could really, the Dems could just go ape wild here.
No, they'll be
In
the chairs of all the committees, and they'll be
Yep,
able to have
yep.
whatever hearings they want. And I don't think that it would be. I definitely believe that they would have a reason to show blockchain and crypto in a negative light, because
Mhm.
remember that it is anything that is beyond their purview of control is something that is negative for them, and certainly anything that disrupts the status quo. And this is 100% a disruptor of status quo.
Yeah. Well, we're going to continue to watch the situation come into September as we get closer to, even if there is going to be any clarity going forward. The key thing here, though, right now is the markets, because the market and the macro are starting to work together. It's very possible we could see a bit of a run here heading into the end of the year. And I don't know, it's going to be an interesting time this fall to watch very closely. So we're going to have Rebecca back here on the show. Of course, we try to have her in weekly here on the Digital Street. Welcome and thanks again, Rebecca, for coming in. We appreciate it.
Thank you so much, Paul.